Well, thank you. I was hoping everybody was going to be captured by the sugar rush after lunch, but and not the carbohydrate drop, so we'll see. Thank you very much for inviting me here to speak. As many of you know, I'm going to explain a little bit about the bank, and if we have time, I'll take a few questions if there are any. We're kind of at the opposite end of the path from where you guys are. You're starting out with technology and innovation and new opportunities. We tend to focus on building out infrastructure. We try to be at the more innovative end of that, and I'll explain a little bit of that in a minute. But it's really good to hear a lot of the stories and see the pitches this morning from people trying to do something new. Try this one. So let me tell you about the Green Investment Bank. We're about 2.5 years old, and we're here because we have a pretty big challenge in the UK. And that challenge is to hit our contribution to the 2020 goals. For the UK, that means a 34% drop in carbon emissions, a 15% of our total energy from renewables. If you convert that into electricity, it's again somewhere between 30 and 35%. And to reduce the amount of waste we send to landfill, which is a really bad thing. In 2010, when the coalition came in, they did a report which was to establish the need for a bank. And when they looked at how much money would be required to solve this problem, it totaled about £330 billion by 2020, so 10 years to do it. So even I can do the maths on that, which is about 33 billion a year if we were on a steady state. So how have we been doing? We need to get a 2014 number yet. We haven't quite got it all. But as you can see, we're investing roughly at about half the required rate necessary. And of course, every year we miss one of those and we don't hit that rate. There's another 16 or 17 billion you have to pile onto the top and divide over a shortening period of time. So it's going to be a real challenge to get there. But the idea of the bank was to help solve some of these problems. Make this asset class more attractive. You can do that by reducing the risk or improving the returns. They focused on reducing the risk through things like contracts for differences. And create a new institution, became the Green Investment Bank, to help solve some of those problems. So we're 100% owned today by the UK government. We have 3.8 billion of your money and mine, taxpayer-funded money. And our role is clearly not to just put that into one project or two projects, because 3.8 billion is not going to solve like 13 billion a year gap. The idea is to use it in key projects which are almost there, almost across the finishing line, but are short of debt or short of equity. Bridge that in purely commercial terms to mobilize that private sector capital that's ready to invest, ready to get to financial close, but can't quite get there. So that by doing that, we accelerate the UK's move to a much greener economy. Now, the bank has been up and running 2.5 years. We have 2 offices. Our head office is in Edinburgh, where I'll be heading after I finish here. And we also have a transaction office in London. We have about 100 people in total, but about 70 of them are specialist investors. This is all they do. But one of the key things that they did when they established the bank was to establish an independent board. While we're owned by the government, they don't tell us what to do. They don't tell us what to invest in or what not to invest in. And that independent board, chaired by Lord Smith, is a key part for making this work. So what's our vision for the bank? It's to be green and profitable, not green or profitable. We must be green and profitable. If we are going to demonstrate that the private sector can make great risk-adjusted returns in this sector, we have to lead from the front. We'll be announcing our results at the end of the month, and we will be able to demonstrate that now 2.5 years in, as some of the early projects that we invested in are going through construction and coming out the other side. And what we try to do is gear that capital we have, that public sector capital, by bringing in private sector capital, but we do so on exactly the same terms. And I'll show you, some of the co-investors that we've brought into projects now and how much we've done. When we set the bank up, the idea was to focus on the areas that needed the most capital. So you don't see us in large onshore wind, and you don't see us in solar, at least today, for example, 2 of the most used technologies, but we focus on the areas which are a little bit more niche or a little bit more difficult to finance, frankly. Those are offshore wind, waste to energy, biomass to power, Energy efficiency, mostly non-domestic energy efficiency, so C&I and public sector. And then most recently, we also started to invest in community scale renewables, and I'll talk you through each of those a little bit more. But what have we done? What have we actually invested in? What have we achieved over the 2.5 years since we've been around? Well, we've committed just over half of our capital, that's £2 billion, to 48 projects. But most importantly, £6 billion of private capital has been committed alongside us. That's one part of capital from us to 3 from the private sector. So we're roughly 25% of the total capital in a project. Some of them were 50-50, some of them were 10%, but on average, about 25% of the capital structure. And we can invest anywhere in the capital structure. We can do debt, do equity, we could do mezzanine, we could guarantee things, as long as we do it at market and we make an appropriate risk-adjusted return. Now, we've invested in every part of the UK. We've invested in projects which are as small as £2 million for an anaerobic digestion project in a farm in Northern Ireland to a £2 billion offshore wind farm. We've set up 7 funds to target the smaller deals. So we typically will look at transactions where we can put 25 million to 250 million at a time into a deal. But we recognize there's a lot of smaller projects, typically energy efficiency and some of the waste to energy projects, the smaller ones, which require 5 million or 10 million. And so we've established funds with a very clear mandate that they have to match the capital we put in with other capital, either project by project or raise it into the fund. And they will look at the 5s and the 10s and the 15s. We've invested in energy efficiency and in waste with local authorities. We've provided debt, we've provided equity, but really offshore wind is where we've put just over half of our money. But if that's some of the financial metrics, I talked about being green and profitable. What are the green metrics? Well, we look at that in 3 ways. First of all, how much waste gets recycled and diverted away from landfill. And when all our projects are built out, and a lot of them are still in construction, they'll produce enough savings from landfill to be equivalent to 2.1 million tonnes per annum. That's more than the waste that is produced in Wales, to give you a ready reckoner. You always have to use football pitches or Wales, so it's more than the waste in Wales. And when all the projects are built out in terms of renewable energy, they'll produce enough renewables for 3.5 million homes. I'm going to switch. That's all the homes for Northern Ireland and Scotland, to put it in context, in 2.5 years. And when we look at carbon reduction, carbon emissions reductions, it's the equivalent to taking 1.8 million cars permanently off the road. That's about 80% of the cars in Scotland. So in a short period of time, as well as investing the capital, we're starting to have a green impact. But the key thing is mobilizing the private sector capital. And you see here we have over 70 co-investors across these 48 projects who've provided this 6 billion of capital. It's everyone from corporates like Dong Energy or Stobart, the logistics company, to UK banks such as Barclays, which is listed here, and international banks, everyone from BBVA to Goldman Sachs. Each of them has taken the same decision we have, that this is a good project and that the returns and the risks they're taking are in balance, whether they're in the debt or the equity. And that makes me feel very comfortable when I look at our portfolio as a whole, that we're doing the right stuff. But has it made a difference to the market? Does anybody care? Is it an impact? It sounds like a big number. Well, what does it really mean? Well, every year we try to measure our market share across waste to energy, biomass to power, and offshore wind. We'd love to do it also on energy efficiency, but it's very, very difficult to get to the numbers. A lot of projects get built on balance sheet without recourse to any external financing. And we are in about, year in, year out, about half of the deals by value. Means we see pretty much everything, and we can look at the ones which really need our capital, or the ones where we believe the risk-adjusted return is the right one. Now, we're not providing half of the money, because for every pound we invest, private sector invests 3 alongside us. So we're providing somewhere between 14, 15, 16% of the total capital, but we're in half of the deals. So it's starting to make a material impact. And you can see here, across the UK, there are over 200 locations, because one project may be to install biomass boilers across 20 chicken farms for Bernard Matthews, for example, or to install energy efficient lighting across NCP car parks. So while we've done 48 transactions, there are over 200 locations where infrastructure, clean green infrastructure that the country needs, is being built across these communities. We're supporting 3,500 with the latest offshore wind deal that we announced. That's getting closer to 4,000 construction jobs. We're also supporting the SMEs. It all doesn't go to building massive offshore wind projects with very large utilities. Almost 500 million of our money has been invested alongside smaller companies. And what we're trying to do is de-risk these projects so that people understand there's a good housekeeping seal of approval when we invest, and it's possible then to raise more money at a lower cost. So what does it look like across the portfolio? Well, first of all, if you look at the right of this chart, about 40% of what we've done has been equity, about 40% debt, and about 20% through the funds. The funds typically invest in geared equity, so we're really 60% equity investor, 40% debt investor. And almost all our money, 75%, has gone into building new infrastructure. The only projects we've built which have been operational have been offshore wind, where we've had an agreement from the person that we bought that from that they will recycle that capital into the next project. And actually what we've done with those operating projects, we've put them into an offshore wind fund, which is the first bullet point on the left. We announced about 9 months ago our desire to raise £1 billion of private capital to really create the world's first offshore wind farm fund. We secured a first close on that on the 31st of March, so just over a couple of months ago, at 460. Strathclyde, the pension fund, announced a couple of days ago their commitment of an additional 50 to that, and we're well on track to get somewhere close to 750 by the end of the summer. And we've transferred those operating assets back into that fund. As I said, it's a young portfolio. The reason that we're just about to break even and we're moving into profitability, it takes 2 to 2.5 years to build some of these projects. So the earliest ones we invested in, where we provided equity capital, are now coming through the construction process and are starting to generate dividends and earnings. And across the whole portfolio, the average return, it's a good infrastructure return. This is without any debt on our balance sheet, about a 9%. That's everything from 5% yielding senior secured debt in a PFI waste project to 15% equity, levered equity returns where we take construction risk. So a lot of what I've talked about has been around infrastructure, and I wanted to just lay out kind of where we sit in this, because a lot of what you've talked about in the early piece of today and after I'm finished will be around the earlier stage stuff. And you can see in the early on, university or R&D funding is what you look like. We heard a lot of people talking about technology strategy board. When you get to larger venture capital type investments, the British Business Bank is set up to handle that. And where we come in, not taking a lot of technology risk at all, is in building out the infrastructure side. So that's kind of a map of how GIB fits with the green industry. You guys are on the left-hand side of this, and we're typically on the right-hand side of this. But we try to do the more innovative transactions, and I just want to leave you with a last slide of several of those to just give you an idea. Westernmost Rough uses 6 megawatt turbines. I heard earlier about 8 megawatt turbines. The last project we announced a couple of weeks ago have those 8 megawatt turbines in them. But we were the first to finance the 6 megawatt turbine from Siemens, which is a factory they're building up in Hull. 75 meter blades in that, which are up and running. We installed the last turbine about a month ago, and that project is now fully operational. There will be an inauguration in a couple of weeks' time. I heard also this morning people talking about LEDs and switching those out. We've provided the capital to Glasgow City Council to do the first switch out of their sodium lamps for LEDs. And as we've gone around talking to councils about the value of LEDs, cutting out 2/3, if you like, of the electricity costs, there are 7 million streetlights in the UK, by the way, 7 million that need replaced. They've told us they buy the story around reducing their electricity costs, but they don't have the capital market, the capital budget, I should say, to replace them. We will provide the capital, and we will allow you to pay us back out of the savings. We'll sculpt that repayment so that you see a net reduction year on year throughout the whole program of that will be willing to lend up to 20 years so that you see your budget going down and you can do that. On Derbyshire, it was the first time gasification was used, so we're not using incineration on this project. It's cleaner, greener, lower emission technology. And it's the first time gasification has been used in a PPP project. So leading the way on financing that. And then finally, building the first non-bank lending platform for community scale renewables. This is a picture of one of our first hydro projects in Great Larrick, so 30, 40 miles north of here. And that is with KKR, the large US fund manager. We put up 100 million, they've put up 100 million, and that's the first non-bank lending platform here in the UK. So a quick run through Green Investment Bank, why we were set up, what we do, where we focus and how it works.
That's great. And where else could you find raises ranging from 50K to $1 billion other than right here at Cleantech Innovate? Thank you, Shaun.
Thank you.
Thank you.